Hello and welcome. Millions of people in the United States struggle financially and cannot receive a line of credit or qualify for a loan, all because of bad credit or a lack of credit. And sadly, these and other credit woes hold people back and keep them from prospering, and not to mention stifling any dreams of ever owning a successful business or expanding on a current one. My name is Obiedzinski. I'm the Director of Client and Partner Relations at Rosy Salon Software, and I am excited to be here with Adriana Williams, who is a Partnership Manager with Accion Opportunity Fund. And today we're going to be discussing how you can become financially resilient and build or rebuild your credit history. So Adriana, welcome, and thank you for taking the time to be here today.
Thank you, Lori, and thank you everybody for joining us today. I'm Adriana Williams, Partnerships Manager at Accion Opportunity Fund, AOF. We are a nonprofit small business lender, and my role at AOF is to work with referral partners such as Rosy to connect with entrepreneurs who are in need of educational resources and or access to capital. So thank you so much to Rosy, especially Lori and Alyssa, for hosting this webinar and for having me. And again, everybody, thank you so much for joining us today.
Thank you. So just to get us started, can you help us to define credit and how it applies to individuals and businesses?
Yeah, absolutely. So credit is a metric used by lenders to determine the credit worthiness of any individual and or business. Essentially, it's a way for lenders to determine whether the person or business applying for credit is likely to pay them back.
Okay. So, why is credit important to small businesses like our salons, and how would they use that credit?
Yeah, so I'm sure many of you on this call know that, credit can be very important for businesses. Oftentimes, businesses may need credit to launch, for example, a marketing campaign, to make payroll, make tenant improvements, or just to expand in general. So credit is definitely very important need for many businesses, and there's many different reasons why a business would need credit.
So, what are some examples of types of credit or types of investments that are leveraged by credit and loans?
Sure. So many entrepreneurs would invest in purchasing their business location, for instance, or perhaps equipment purchases as well. So these would both be considered as investments leveraged by credit.
Okay, good. So, if somebody has good credit already, why would they use a loan versus cash?
So loans are a great way for businesses to help build their business credit. Many businesses also prefer to use a loan instead of cash, so they don't eat into their cash flow. And also important to note is that I know it's tax season, right? The interest expense on a business loan can be written off on the business taxes, so that lowers your taxable income.
That's huge. That's really awesome that they can do that. So, a large percentage of salon and spa owners are the sole proprietors. So, how does credit affect them differently? And what are some of those best practices to ensure securing a loan for their business?
Yeah, so as many of you probably know, many sole proprietors run their business primarily using their personal credit, and this results in your personal credit affecting your business far more than the other way around. So if at all possible, try to avoid providing your social security number and hence access to your personal credit, right, for business purposes. This will help keep the two, your business and your personal credit, right, separate. So for instance, when open a business credit card, let's say, instead of a personal one. And also important to note is that credit bureaus do not distinguish between business and personal inquiries. So too many inquiries can have a negative impact on your credit score. And I know we'll dive into that a little more later. And also an important tip is that if you do have to use your social security number, do ask the lender whether the loan will be reported on the business credit report. But more on that later.
Okay, so that's a good tip though, is to keep it separated, personal from business. So, what are some of the basics that people should know about their credit score?
Yeah, so your credit score is determined by five main factors. Number one, your payment history, that accounts for approximately 35% of your score. Overall credit history, 15%. New credit, 10%. Types of credit, 10% as well. So that the types of credit meaning, there's credit card debt, right? Auto loan, mortgage, student loans, that type. And amount owed is 30%. So your credit report will show your credit summary overall, meaning a listing of all the accounts ever connected to you. Public record information such as any bankruptcies, liens, or judgments, etc., and credit inquiries.
Perfect. All right, so we're going to take a quick second to take a quick poll from our audience. So Elisa, who's in our background helping us out, if you can launch the poll to everybody, we want to know from you, what do you think is the top reason why businesses would not qualify for a loan?
All right, the poll is launched. We'll give everybody about 30 seconds to answer. All right, thanks for answering. Okay, we got, oh good, about 60% of our participants have voted, so I'll give just another couple seconds. I'd like to hear from nearly everyone.
Yeah, thanks for participating.
Okay. All right, so before we reveal the actual answer, here are the respondents. About 68% of people responded. 67% thought too much debt. And the other 33% of those who voted thought low credit score. So the other three answers got 0%. So looks like we got a smart crew here.
Great.
Absolutely.
So Adriana.
Dun, 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 dun. Drum roll, right? You guys hit the nail right on the head. Yeah, too much debt is the primary reason why many entrepreneurs are not able to get a loan or line of credit. And the second reason, following right up, is credit. So yeah, you guys absolutely know what's going on. And again, thanks for participating. I think this is a really interesting poll question.
Yep. So Adriana, can you tell us, and on this last slide that we were on too, it said FICO and the credit in there. So what is the difference between a credit score and a FICO score, and which one is more important?
Yeah, so FICO stands for, as the slide reads, Fair Isaac Corporation, and that's the company that created the FICO credit scoring model, which a majority of lenders, some say over 90%, use. So you can think of FICO as a specific brand of credit score. There will be other companies that create their own credit score model. However, I would say that the two main companies would be FICO and Vantage Score. So it's basically FICO is a type of credit score.
Okay. So then what is considered to be good or bad credit score, and how do examples of bad scores and good scores translate into interest rates and the ability to get a loan or a credit card with having a good rate?
Yeah, so as you can see on this graph, a FICO score of 579 and below is considered to be poor. Those between 670 and 739 are considered to be pretty good. And lenders, as I mentioned earlier in the presentation, they use credit scores to really help predict whether a consumer is able to repay a debt on time. So therefore, those who have poor credit tend to pay a higher interest rate because they're deemed to be riskier. So I know as much as we shouldn't judge others, unfortunately, lenders will use your FICO score and credit score to determine, what end of the spectrum that borrower will be, and will base that, will base the interest rate on that scoring model.
Okay, so how can someone go about finding out about their credit score? And since you recommended that they keep their personal and business separate, how do they find that information out about their business?
Yeah, so every consumer has a right to get a free copy of their personal credit score every year, and you can go to annualcreditreport.com to get a free copy. And I definitely recommend you do so because, yeah, you want to make sure that lenders or any kind of, credit card company that you have that you're currently using are reporting correctly, right, on your credit report. And there's also a lot of, fraud out there. So you want to make sure, everything that's on that credit report is accurate.
Okay. So why is it so important to know their business credit score?
Yeah, absolutely. So when it comes time, right, for you to apply for a business loan, for example, lenders will look at your business credit report. So you want to make sure you know what's on it. So for business credit, if you don't have a DUNS number already, definitely apply one with Dun and Bradstreet. Also open a business credit file with Experian and Equifax if you don't already have one.
Okay, so we told them where to go to find their credit. What if they don't have great credit? What can people do about having maybe bad credit?
Yeah, so if you don't have good credit, I would suggest number one, to definitely pay your bill on time, right? Also, if you have high balances, definitely pay that down. And don't max out on your credit cards, and only apply for credit when you absolutely need it. Because as I mentioned earlier during the presentation, having too many inquiries into your credit will affect your overall score.
Okay, so those are good practices. So how long would something like that take to have a positive impact on somebody's credit?
Yeah, it depends on what is dragging down the individual's credit. So improving your credit worthiness doesn't happen overnight. Definitely takes a lot of patience. So having said that, if, for example, you have huge credit card balances, paying down all or a large portion of it is probably the quickest way to improve your credit score. There are some folks who perhaps have a bankruptcy, let's say, on their credit report. That might take a little longer to improve. So it all depends on the situation.
Okay, so what about somebody who may just be getting started or somebody who doesn't have credit yet?
Yeah, so those who have no credit can definitely build their credit, right? By applying for a credit card, for instance, and by using it sensibly and paying the bills in full, ideally, and definitely on time. You want to make sure you do that.
Okay, are there some red flags that somebody should be looking for when they're establishing or rebuilding their credit?
Sure, yeah. So as I mentioned earlier, don't max out on your credit card. I know it's really easy to go out and just spend because you're not actually using cash, right? So the mentality is different. So if at all possible as well, another tip, as I mentioned earlier, is to pay down as much as you can each month or in full, ideally. And also, don't try to apply for too many cards at the same time. And lastly, again, make your payments on time. That's very important.
All right, great. So there may be some salon owners who may be struggling financially right now. What tips could you offer some of our salon or spa owners?
Yeah, there's definitely many areas I feel that an entrepreneur can boost their business revenues. So, for instance, if you haven't used social media or other marketing tools to boost your business profile, definitely try doing that. Perhaps also try using a loyalty program in order to boost client retention. And also think about any costs that you might be able to lower. For example, maybe moving to another location with lower rent expense, right? There are also, on another note, there are also a lot of grant opportunities out there that can perhaps help you in the short term until your business gets back on its feet. So I always suggest folks to, yeah, definitely work with a lender, because as a business, you're in it for the long haul, right? And grants are really sort of a band-aid solution. It's more of a short-term solution, while working with a lender is more of a long-term thinking.
Okay, great. So if a salon is looking to secure a loan, how do you suggest that they proceed?
Yeah, first, I would recommend assessing your situation. For instance, know your credit profile, both business and personal. Understand your business cash flow. How much is your business making? How much are you spending each month? Then I would explore the different lenders that are out there. Your first option really should be to go to your bank, obviously. That's where you get the best bang for your buck. However, if you don't qualify for a bank loan, perhaps explore some nonprofit organizations like Accion Opportunity Fund, AOF. There are also a lot of free resources out there, like the Small Business Development Centers, SBDCs, that provide free business advising. And oftentimes they're really plugged into the community, so they'll know what resources are out there in terms of lenders and grant opportunities. So that it's a huge help, SBDCs. And lastly, make sure you have the necessary documents. For example, tax returns, those are very important. Business bank statements, financial statements if needed. And those are documents that a lot of lenders will require.
Okay, great. So Adriana, you mentioned Accion Opportunity Fund. Can you take a quick moment just to explain what Accion Opportunity Fund is?
Absolutely. So we are a nonprofit small business lender, and we are designated by the U.S. Treasury as a community development financial institution, which means that part of our mission is to really assist women-led and minority-led businesses and those that are located in low to moderate income communities. So we work with a lot of folks who unfortunately are not able to qualify for a traditional loan. You know, banks have been pretty conservative, especially due to the pandemic. So, you know, Accion Opportunity Fund, we really try to step in and help folks to provide affordable alternative financing, because there are a lot of lenders out there, especially online, but you really have to be super careful and know your business, you know, really try to focus on what that loan amount and that payment amount each month would be and whether you can afford it. So our mission is really to try to help as many small businesses as we can.
Awesome. Adriana, thank you so much for being here today with us and helping everybody to understand how to build and rebuild credit. It's been a pleasure chatting with you. So for the resources that were mentioned by Adriana, you can go ahead and scan the QR code here for more information. In the meantime, you can also join us on our Facebook channel, so our Rosy Salon Software Community Group, as well as our Rosy Salon Software Facebook page. Next week, Monday, April 18th at 11 a.m. Eastern, we're going to be learning more about marketing communication tools, such as two-way communications via text messages with your salon to client, lead generations, and how your salon can earn more leads for customers in your business. We're going to be learning about forms and digital forms mostly, and how to gain new customer surveys and where you can be putting those things. So go ahead and scan our QR code to access our Facebook groups. You can join from that page if you would like. But I think at this point, Elisa, if you want to help open this up, if we have any questions for Adriana.
Yeah, thank you, Lori.
Yeah.
Thank you, Lisa.
Yeah, and if you haven't had a chance to, and you have a question, locate your control panel from the GoToWebinar that was automatically put onto your screen, and you can ask a question from that control panel. But we do have a few people that have asked questions, so we'll start with those. First question is, what do I need to look for in a lender?
Yeah, I would say that, you know, it depends on your situation, but number one, you know, what loan amount are you looking for, right? And also, what are the repayment terms? Some folks tend to like a longer repayment term, like 7 to 10 years, you know, so yeah, and those are some factors to look into. What is the APR, for instance? You know, that's what are all the loan fees? You know, you want to make sure that you're able to afford the loan. So definitely look into that. And how often do you have to pay that loan payment? So those would be some item that I would ask.
Great, great. Next question is, how long does it typically take to hear back if a business loan was approved?
So with AOF, with us, once you submit all your loan documents and we have a complete loan package, it typically takes between 5 to 7 business days to get a loan decision. And also with our application process, it's pretty simple and straightforward. The first step is to fill out our online application to see whether you pre-qualify or not. And we only do a soft pull, so we don't impact your credit. And by doing so, you know, by filling out our online application, you'll automatically know instantly, actually, whether you're or not you pre-qualify. And we would give you a couple of different options in terms of repayment terms, like a 12-month term, 24 or 36, or sometimes up to 5 years. So that's how our process works.
Okay, great. Great. Why don't lenders tell businesses why they were not approved? Is that not commonplace? Maybe not.
Yeah, that's a good question. I can't speak for all lenders, obviously, but with us, we would definitely let you know what the reason would be, whether it be insufficient revenues or credit issues. Yeah, I mean, if it was with your bank, for instance, I would definitely ask your banker exactly why, right, the decline reason was. Because if it was, let's say, credit, right, then that's something that you know you can work on. So definitely ask, I would say. Yeah, you have a right to know.
Right, right. Interesting question. That person probably had that experience where they weren't told. Okay, a couple more coming in here. Do you suggest or do you require a business plan during the application process?
We do not. We just require a copy of your latest business and personal tax returns, copies of your bank statements from the past 3 months, and a color copy of a government issued ID, like a driver's license. And that's all we require. So, but we do require that you have at least 1 year in business and at least 50,000 in annual revenues. So I believe that, perhaps some lenders who do provide startup financing might require a business plan. But yeah, at AOF, we do not.
Okay, great. Well, that was a good question. Okay, that wraps up all the questions that had come in. Everybody's on mute, so this is the way to ask your questions would be in that panel. Looks
All right.
like we can start wrapping up. No more questions are coming in.
And again, you can scan the QR code to go to the Accion Opportunity Fund page where you could get some more information and resources.
Absolutely.
So
We
thank
have a
you
great
again,
resources library.
Adriana. Thank you
Yeah.
for joining us, and thank
Thanks,
you for
Lori.
everybody else joining us here. You can always reach out to the Rosy team with the phone number here, the email that is listed above. You can go to getrosy.com. If you go to our partners page, you can find Accion Opportunity Fund there and a link to their website again. And if you are not currently using Rosy, you can go ahead and scan the QR code to get started for your 30-day free trial today. So thank you so much for joining us. Thanks, everybody.
Thank you.
Thanks, Alyssa. Thank you, Lori. Have a great day, everybody.
Bye.
Thank you.
Bye-bye.